Welcome back to Morning Trade Live. It's time for Chartmaster. Jenny Horne will take us through the fundamentals. Kevin Green will go through the technicals, and we have key names to watch. We start with ON Holding, and Jenny, looking at the details ahead of the report due out on Tuesday. Good morning to you both. Jenny?
Good morning, Nicole. And I will say that ON looking quite different than it once did. I mean, we're lower by about 17% on the year. And so been a bit of an underperformer. We're expecting at least some optimism that's supposed to, help really reignite the growth story here with ON. So it has been disappointing, yes, but we also see a lot of this athleisure weakness really as a result of, everything that's been related to Vietnam and, of course, some of the overall Asia Pacific offerings. That being said, though, analysts still pretty favorable on this name. Like, we did see an outperform rating out of Telsey Group today, highlighting actually that the stock right now could see some upside, $65 price target, which does imply about 39% upside. The stock does command right now a moderate buy rating amongst the 19 analysts that do cover this name. Average price target is $64 a share, which again would imply some significant upside, roughly over 37% or so. But right now, this name also has really been trying to carve out a niche in what has already become a very highly competitive athleisure market. Like we've seen this weakness, this eroding market share in names like Nike. Lululemon has also been a disappointment for several quarters, and ON trying to get into a space that is relatively difficult to command market share in. And of course, being that they are an international company, that also does add a degree of I'd say difficulty right now when growing. So we'll have to see if we can, obviously hope for a turnaround story in some of these athletic exposed names. But all things considered, ON was later to the game, has really grown in adoption. And you can see it. I always say, it's like ahead of earnings, look at what trends people are watching and what people are wearing, especially. And people have definitely been very much wearing ON more frequently than I've ever seen before.
Yeah, that is without a doubt. You do see them everywhere when you take the subway. There's always the Nike and the Adidas and the Hokas, but, ON is there. Kevin, can you take a look at the chart, please?
Yeah, from a chart standpoint, obviously we did see a little bit of a breakdown, a really strong trend. Pretty much this time last year, we had a nice, well-defined bullish channel here where we did actually see a little bit of a fracturing right around December or so. We came down, tested the 200-day moving average, tried to bounce off of it, leverage that 20-day moving average as an area of resistance, and then we saw a breakdown. Broader market also broke down as well. We did see a value area pretty much between $35 and $40 here, where some buyers really stepped in fairly aggressively. Obviously, the broader equity market also saw some aggressive buying as well. And we broke back up, hit that 200-day moving average, challenged it for a bit, tried to break out, but once again, failing. Now, one thing that's actually very interesting about this, we failed, and then we tried to leverage this 200-day moving average pretty significantly for, let's say, about a month or so until we actually did see a breakdown. What you're looking at is this final gap. It's a very small gap between 42.5 and let's say $44 or so, where we could come back and test. Maybe some buyers will step in. If not, if it's not going to be able to hold, Nicole, then you're going back to this value area between $35 and $40. RSI is trying to bottom out here. It's the first signal that maybe a bounce could be had here. We might have a nice little, for the most part, a doji candle right now, but MACD is in a bearish formation below the 0 line, 12 EMA below the 26 EMA. Cautiously optimistic. It just doesn't seem like we're hitting a firm area of support right now for the name.
Okay, next up, how about we look at Chili's parent Brinker, and that reports on Wednesday. Jenny?
Yeah, this name has been really seeing, phenomenal for years now. Phenomenal growth really led by its Chili's brand. And I would have never guessed that Chili's would command such a strong, loyal market, but they really do. There are various now, the appetizer offerings, as well as I know that the crispy chicken has been a theme that's been doing quite well amongst Taco Bell, McDonald's. Brinker also has a very similar type of offerings that are affordable. Right now it's very difficult to eat at a restaurant and spend roughly less than about $30 on average for their ticket size, but that's what Chili's really commands. So more of this affordable dining experience while also not really truly being fast food either. So this earnings report, as you said, expected to be released on August 13th. is going to be expected to see some degree of overall improvement. Earnings expected at $2.43 a share. That would actually represent a year-over-year change of over 51%. On revenue of roughly 1.43 billion, that would be up 18.5% from last year. Now, keep in mind, again, we've seen earnings actually revised about 1% higher over the last 30 days or so, which is a strong indication of how the street really feels here. But also, we've seen a definite theme of the haves and have-nots in the restaurant world regarding same-store sales. If you can see a positive number for this, or better than expected at least, that's seemingly doing quite well this quarter. Again, as we've seen now from names like McDonald's with a same-store sales that pace that accelerated faster than we've seen in nearly 3 years. What has not worked well is if you see that level remain depressed, or if you see some contraction as far as same-store sales. That's something we've seen out of names like Chipotle. So Brinker, again, a bit different because it's truly more of that fast casual dining experience. But affordability has been huge as we see more and more consumers trying not to dine out as frequently. Comps have, though, remained a pretty challenged metric for all these restaurant names this quarter.
Okay. You know, when you think about what's going on here, so what are your thoughts here, Kevin, when you look at this?
Yeah, when you look at the chart right now, you still have to say that it is in a bullish formation. Obviously, this time last year, we saw consolidation, leverage that 20-day moving average as an area of support, and we had a really nice run up. We rarely failed that 20-day moving average, and when we did, it was only for a day or so. We had this kind of blow-off top type of pattern, hitting that $192 level, coming back, consolidating for about a month and a half, 2 months here. You can see this is kind of a cup and handle pattern, if you will, coming back down, consolidating, retesting, trying to retest near those highs, coming back and failing again, and trying to see if we can break out here. If we also kind of look at this, you could see on that time frame, we also had a little bit of an inverse head and shoulders pattern as well. That is actually fairly bullish before we saw the failure. So we're in the handle portion right now. What you would like to see is potentially maybe a little bit of a test of that 200-day moving average right now, which is sitting at around $148 or so, and then trying to break to the upside, getting above not only just this 185-ish area, but getting to those highs of 192.22 and then breaking out from there. MACD not really showing us much. Maybe it's trying to bottom out into a bullish formation. RSI still making lower highs at this point in time, but maybe we have a little bit of a rebound here. I do want to bring up another chart for this stock, though, because it's very interesting to see how we are seeing this develop on the monthly chart. And if we look at the monthly chart, this is where you get a little bit concerned, Nicole. Obviously, we have this run up. This is a 10-year monthly chart right now, but you have an RSI divergence, so RSI is making lower highs. MACD is actually curling here and potentially could be on the verge over the next couple of months, crossing below that 26-month moving average here. And you could make the case that maybe this is a double top type of formation taking place right now, with that neckline being at around $125. So you really need the bulls to step in, try to break this one out. If it stalls out here for too long over the next couple of months, you can also make the case, if you are a bear in this name, that it could be an opportunity to short, and maybe we come back and test the $60, $65 level.
All right, so key to look at the double tops, seeing which way it could go, right, and giving us the bullish and bearish sides of things. Thank you for those charts. Last but not least, we look at Cisco Systems. It reports on Wednesday as well. Jenny, some of your thoughts there. What should we watch for?
Yeah, I will say that Cisco does remain in this hardware space, which has been not exactly as favorable, broadly speaking, as software has been this earnings period, although it really depends, because I will say anything with tech exposure, especially for a name as strong of a performer as Cisco has been, you have to put up really nice guidance. And I think that the bar is set pretty high, as last quarter we saw about an 11% increase in their top line, with a 32% improvement for their GAAP net income, as well as 35% improvements for just earnings overall. Their positive earnings surprise has been about 5.5% over the past several quarters. And their AI infrastructure orders did exceed roughly $600 million last quarter. That was surpassing the $1 billion target in just 1 quarter early. So they have been able to meet a lot of the already high metrics that were set forth by management. And they did reach about $7.9 billion for their subscription revenue last quarter. That now represents about 56% of their overall total revenue. So now as we look at earnings, of course, we're expecting about 11.5% increase on their earnings at around 97 cents a share. And right now, expecting roughly about 14.5 to 14.7 billion for revenue. And again, the 12-month stock price target has been around $70. So the high forecast right now amongst analysts is $78. The low is around 53, according to roughly 25 analysts. So that would, right now, at least imply some modest upside from here. But it's also the thinking of valuations are stretched. Anything, again, with this tech exposure, especially hardware, has remained relatively challenged post-earnings. But hey, good guidance can oftentimes reverse this tone, and we can see, for their upside, it's not actually been completely abnormal to see names that have outperformed still see a nice pop on earnings. It's just been a bit harder to do so with, again, relatively high valuations and a lot of this optimism priced in.
Yeah, and look, after its last earnings report, it's doing so well since then and hitting new highs. Kevin, what do you think here about the chart?
Yeah, this is the most bullish chart that we've seen out of the 3 stocks that we've talked about here today. Obviously, a nice strong uptrend that we saw last year. The stock was below the 200-day moving average, came out, tested it again, and then we started seeing a really nice uptrend here. Not only did we see a small consolidation, but we continued to kind of move a little bit higher, getting to around that $66-ish level. Once again, you can make the case that maybe this is kind of one of those cup patterns where we came back, flagged out, and then broke higher here. And now we did see a consolidation for about a month and a half, and we are seeing a breakout. I actually like this chart here, Nicole, because the breakout is very strong and it's on a lot of volume. RSI also showing that momentum is still maintaining in this name when it comes to price action, and MACD in a bullish formation now over the last 2 days. It's actually made this cross, this 12 EMA above the 26 EMA. This is a stock that obviously, if it could have really good fundamentals over the next couple of weeks here, could continue to gain traction when it comes to buyers stepping into this name. And if you are a bull, you really like seeing this stair-step approach to the upside, making sure that the market actually found value here at around that $58 level before trying to push higher. It seems like this is a stock that's ready to continue to the upside. You could even look at the $80, $85 level as your next major area of resistance.
A good look there. 3 key names for next week. We get you ready with those. Jenny Horne gave us all the details, and Kevin Green there with all the charts. Thank you both.